Thank you for taking time to watch this video on the changes that are being introduced into the Pegasus payroll solutions for the completion of the 2017-18 payroll year end and for the setup required to start running the payroll in the 2018-19 tax year. Hello everybody, my name is Steve Power and I'm a solutions consultant here at Pegasus Software. What I'm intending to cover in this particular video is what is required to complete the 2017-18 year end. I'll give you a step-by-step guide to complete the 2017-18 year end using RTI for the end of year submissions, and I'll go through any of the other changes that are in place prior to the end of the current tax year. Next, we'll look at what the payroll changes are for the 2018-19 tax year. So what is new in the legislation and therefore the changes we've had to make to the software to accommodate that new legislation. We'll also look at starting the first payroll in the 2018-19 tax year. And finally, we'll also look at the new functionality that's been added into the Opera 3 payroll. I'll be using Opera 3 to run through this end of year process, but what I'm showing you is equally applicable to our Opera 2 customers. If there are areas that only work in Opera 3, then I'll explicitly point those out to you. Here are the version numbers required to run the 2017-18 year end. For Opera 2, you need to be on version 7.70. For Opera 3, you need to be on version 2.50. For Capital Gold, this needs to be version 4.05, and the Pegasus Online Filing Manager needs to be upgraded to version 4.01. When should you apply the upgrade? In early February, Pegasus will have made available the payroll upgrade software on the Infor Download Center so that both our partners and our customers have access to the software. The software can be installed in any pay period before the end of the 2017-18 tax year. We recommend, however, that you install the software as soon as possible. Once installed, the software is in place and ready to run the year-end procedures, submitting the final FPS for the 2017-18 year-end, submitting the final EPS for the 2017-18 year-end, and then you're ready to start processing the first payroll in the 2018-19 tax year. The last point you should install the upgrade is before you start running the final payroll in the current tax year. This is because you will need to run the payroll year-end processes, the year-end reports, so you must have the software installed before you do that. But this is very late to find out if you have a problem. So our recommendation is that you aim to apply the upgrade as early as possible. To help you understand how to run the end of year and start the new tax year, and what are the changes in the new tax year, we have produced two documents to guide you through this process. The first guide is the Legislative and Product Changes Guide. This is a guide to help you understand the legislative changes and the other changes that affect this year's payroll upgrade. This includes information to help you understand the changes we have made within Opera and the Online Filing Manager to support the legislative changes. The second guide is a checklist guide. This is a guide to help you understand the steps to upgrade Opera, upgrade the Online Filing Manager, complete the year end, send the final RTI submissions through to HMRC, and then start the 2018-19 tax year. You'll be able to download the software directly from the Infor Download Center, and you can download these guides from the Pegasus Info Center. But of course, many of our customers will want their partners to help them through this upgrade process and running the year end. If you're going to get help from your partner to run the year end, then discuss this with them earlier rather than later, because this is a very busy time of the year for them. Okay, what are the changes we've made for completing the 2017-18 year end? The P60s are updated to the 2017-18 year end. Under the end of year special reports, there's an option called P60 end of year returns. This option allows for the production of the printed P60s that are given to your employees. If you choose to print the P60s, then you can select the printer option and select either the HMRC version or the Pegasus version. These printouts can be run selectively for the department range or for an employee range. If you select the HMRC version, then this is a single sheet P60. It's a laser printed version and it can be ordered from www.gov.uk. There's also a Pegasus version. This can be ordered directly from kalamazoodirect.co.uk. There are two versions here. There's a 2018 self-sealing P60, which is simply a printed version which you fold, seal and post. But there's also a P60 peel and seal version. This means it can be printed, checked later, and then can be sealed by removing the strips, then folded and sealed. If you require the HMRC version, then go onto their stationery order line on the .gov.uk website. Here's last year's option on their stationery order line. You're looking for the P60 single sheet shortened version. Remember, there isn't a file copy, so if you want a file copy, how about ordering double the amount? The layout hasn't changed from last year, other than the date has been updated to say tax year to 5th of April 2018. When you go onto the order line, you'll also need to fill in the delivery details. Make sure you order them in a timely manner, and also remember these need to be given to your employees by the 31st of May 2018. If you have Opera 3, you have two other options. You can use the email P60 option. This allows you to email the P60s to your employees. The P60 is encrypted so that only that employee can see their emailed P60. This functionality also allows employees to have their payslips emailed to them as well. This comes free of charge with Opera 3. There's also another option to allow the P60s to be published to the web. This allows employees to look at their P60s online using devices such as laptops, iPads and smartphones. Again, it is also possible to publish payslips to the web as well. This functionality is known as Payroll self-service and again is available to our Opera 3 customers. If you want to know more about these options, then go to the Pegasus website or ask your Pegasus partner. Okay, so what is the process to run the end of year? Well, first of all, take a backup of your Opera 2 or Opera 3 system, and then you need to upgrade Opera 2 to version 7.70, or you need to upgrade Opera 3 to version 2.50. Remember, you should install this software prior to running the last payroll, but preferably before that point. Obviously, when you do an upgrade, you need to go through and run a UDS. So let's hop across into Opera and have a look at the UDS. So I'm going into the administrator and I'm running the update data structures. This allows me to select which companies are to be updated. And then when you select that company, you have this option here to change the statutory rates table. And if I tick this box here, it will apply table 1 to be the current tax year and it will apply table 2 to be the next tax year. If we go and have a look at those tax tables within the payroll, here we can see table 1 is for the year effective 6th of the 4th 17, and if we go on to table 2, here's the table effective for the next tax year 6th of the 4th 2018, and this will therefore have all the bandwidths and the national insurance figures for the new tax year. That's one way of updating the tables, but you also have an option to do that directly within the payroll itself. You've got this option here to copy the statutory rates, in which case this will allow you to copy the statutory rates from the defaults that Pegasus send out and update the individual company that way. So there are two options available to you there. The next thing you'll do is upgrade the online filing manager to version 4.01. Once you've done that, you would run the normal payroll processes. So you would add in the timesheets, you would confirm the temporary and the permanent payment values, make sure the deductions are correct, and then you go through and run the payroll calculation. Once the payroll calculation is run, you will then go through and print out the pay slips. You'd print the normal payroll summary reports, such as this period summary and the to-date summary reports, along with all the other reports. You'd also go into the P32 processing form to make sure that the funding and the payments are all correct. However, you do not run the update at this moment in time. This completes the normal payroll run for the last payroll in the 2017-18 tax year. We then need to run the process for completing this 17-18 tax year. How do we do that? So the next thing I need to do is I would go into Opera 3, end of year special reports, and produce the reports such as the P60 end of year return. Let's hop across into Opera 3 and let's do this from within the software itself. So if I go into the end of year special reports, I can produce the P60 end of year returns. Choose the payroll groups. And in my example, I'm going to produce both the printed version and the email version. So here's the email versions, and it'll show me a copy of these through to screen. And there's the P60s for those particular employees. I can then go through and I can produce the printed versions. So these are on the pre-printed stationery, and therefore it's laying out to that stationery. Once I've done that, I can then go through and produce the P35 substitute. And again, I don't need to produce this report, but it provides me with useful information. So if I go into the end of your special reports, print the P35 substitute, and send this through the screen, that shows me the tax and the national insurance for my individuals, and it shows me the overall totals. Next report I might want to produce is the payment and deductions list, or I can use the advanced payment and deductions list. Again, if we hop across into the software, we can produce the standard payment and deductions list. In this example, I can choose the individual pay elements, so the basic, overtime, expenses, and so on. And I can send this through, my example here, through the screen. So for basic pay, those are the values for the basic pay. Or if I use the advanced payment and deductions list, this allows me to produce them individually or in bulk. So in this case, I'm going to produce the basic, the overtime, the expenses, the commission, and so on. So this allows you to produce that payment and deductions report, but it allows you to produce it in bulk for each of those pay elements. And again, if I publish this through to the screen, we can see the details there. This one is produced for the basic pay. If I go on to the next page, this is produced for overtime, and so on and so on and so on. And finally, I would go through and produce any of the other reports that are needed in that final period of the 2017-18 tax year. Now, I'm ready to proceed with the completion of that final payroll in the tax year. So if the payroll is linked to the nominal ledger, then you would use the nominal ledger analysis to update the nominal ledger. If the payroll is linked to the cash book, then you'd run the cash book transfer. If the employees are paid by BACS, then you generate the BACS output. Okay, the next thing we need to do is send the FPS through to HMRC. So again, we create this final FPS. So we hop across into the Opera 3. As you normally would do, we go into the RTI submissions, create the FPS for the final payroll in the current tax year. So I'm going to do a summary report here. 46 employees, that looks correct. Do you want to create the FPS? Yes, I do. Here's the summary audit trail report to go with that FPS. And then it allows me to use the online filing manager to submit the FPS through to HMRC in the normal way. Password, confirm the password, and submit. Okay, once we've sent the FPS, that's fine, but remember, HMRC have a tendency to take their systems offline this time of year. There is an option there to go through and check the service availability. So if you log on to the government website, so that's government.uk, you can look at this option here, service issues for PAYE, and if you select that particular option, it will show you the status of the PAYE service. So you select this particular option here, and in this example it's showing me that the service is fully available. However, there is an option here to look for the planned downtime, in which case you can see when the revenue are planning to take down this site. So in which case you can plan these submissions around the availability for that particular site. So this can be quite useful to people. Okay, the second RTI submission we need to send through to HMRC is the EPS. So again, let's hop into Opera 3 and let's send the final EPS for the 2017-18 tax year. So within Opera 3, we take the option to send the EPS. However, this EPS is the final EPS of the year. Have we sent in the FPS through to HMRC? Well, yes, we have. We sent that a moment ago. But it is just confirming that you've sent the FPS before you send this EPS. Yes, I wish to continue. Just confirm that these figures, these recoverable amounts are all correct. Yes, they are. And it tells me I'm just about to produce the report for the final EPS of the year. I'm going to send this audit report through to screen. I'm happy with that. I'm now going to submit the EPS via the online filing manager as normal. So again, I enter the password to the gateway, confirm the password to the gateway, and submit. Now that we've sent the RTI submissions through to HMRC, we can now go through and run the final payroll update for the current tax year. Let's hop across through into Opera 3 and let's run this final update. So as normal, within the payroll, we go into the option here to update the payroll for this tax year. I'm happy with this and therefore I'm going to run through and perform the update. I can reset the pension screen contributions back down to 0. I'm going to do exactly that. Do I want to continue with this update? Yes, I do. And it just confirms that have you run all of the end of year reporting? Yes, we have. We've produced all of those and we've sent these submissions through to HMRC. Now it's going to go through and run the final update in the current tax year. And as we can see, it is now telling us that the period update was successful. Now we need to go through and run the end of year clear down to complete this end of year process. So again, if we hop into Opera 3, under the end of year special reports, we now have the option here for the end of year clear down. If I'm going to select this for the monthly group, it warns me this will increase the tax year from 1718 to 1819. That's exactly what I want to do. It just gives you a warning message. Then it allows you to go through and clear down the cumulatives for the payment and deductions. In my case, I'm going to select all of the payments and all of the deductions to clear the cumulatives down. If you don't want a particular cumulative to be cleared down, for instance loan repayment, I can selectively turn that off from this list. In my example, I'm going to set them all to 0. And it's telling me the clear down is now complete. Okay, now that the end of year clear down is complete, there are a few final checks we should undertake. First of all, we should just check that the set options, that the current tax year is set correctly. So if I hop into Opera 3 and we look at the set options, is the current tax year set to 1819? And in my example, I can see that's exactly the case. So that's correct. We should also check to see, is the calendar showing the current tax year as well? So again, if I hop back through into the utilities calendar, is the calendar now set for 1819? Yes, it is. And are these usual pay dates correct as well? In my example, that looks perfect. And we should also check that the PAYE NI statutory payment tables are correct. In other words, is table 2 set to be the new tax year? So if we have a look at table 2, is it set to 1819? In my example, I can see that's exactly the case. And I guess we should also check to see, are these bandwidths correct? So for the PAYE, employers and employees NI, SSP and the other statutory payments. And in my example here, they're all looking correct. Are you subject to small employers relief? In other words, is the total NI Class 1 contribution less than £45,000 in the previous tax year? If so, then you can reclaim things like statutory maternity rate pay at a rate of 103% compared with the standard 92%. If that is the case, then within Opera 3, under the set options, we can go through and we can turn on this option here, entitled to small employers relief, in which case the system will automatically calculate those values at that higher rate. And I guess the final thing we need to have a look at is the employee tax codes. So again, if we hop back into Opera 3, we've got this option here for global changes, and what it allows us to do is globally change the tax codes. So what we do know is that the L suffix is going from 1150 to 1185. In other words, it's increasing by 35. So in which case I can globally apply this to all of my employees, or I could be selective. I could choose individual employees to apply that through. But it's just a quick way of going through and uplifting those tax codes. And that completes the end of year procedures within the payroll. Remember, the sequence of events that I've just gone through are clearly defined in the checklist guide that's available from the Pegasus Info Centre. If you're in any doubt, then please contact your Pegasus partner for help and advice. Okay, so what are the actual changes that have come into force in the 2018-19 tax year? The first thing we will have a look at is the income tax bandwidths. The basic rate has risen by £1,000, so that bandwidth is from 0 to 34,500. The higher rate has also risen by £1,000, and that rate is from 34,501 through to 150,000. And the additional rate at 45% is £150,001 and above. These are the tax rates for the rest of the UK. So these are for England, Northern Ireland and Wales. The Scotland Act of 2016 provides the Scottish Parliament with powers to set income tax rates and bands that will apply to Scottish taxpayers. In December 2017, the Scottish Cabinet Secretary for Finance delivered a draft budget where the rates and bandwidths in Scotland are different to those in the rest of the United Kingdom. Here are the bandwidths for Scotland. There's a starter rate of 19%, which is from 0 to 2,000. There's a basic rate, which is 20%, and that is from 2,001 to 12,150. There's an intermediate rate, which is 21%, and that bandwidth is set from 12,151 to 32,423. There is a higher rate, which is set at 41%, and that is from 32,424 through to 150,000, and there's a top rate which is 46%, and that's for salaries above £150,000. I stress that these are draft proposals at this stage. They should get confirmed by the Scottish Parliament prior to the start of the new tax year. However, as draft proposals, they may still be subject to change. The personal allowances have risen by £350 from 11,500 to 11,850. Therefore, there's a general uplift in the tax codes with the L suffix by 35, from 1,150L to 1,185L, and the emergency tax code also goes to 1,185L. Here are the national insurance bandwidths. The lower earnings limit has risen by £3 to £116. The secondary threshold, i.e. the point at which the employer starts to pay national insurance, has risen by £5 to £162. The primary threshold, i.e. the point at which the employee starts to pay national insurance, again has risen by £5 to £162, and the upper earnings limit has risen by £26 to £892. There are no changes to the percentage for the calculation of national insurance for the standard NI codes, i.e. the standard A category code. So below the lower earnings limit, that is set at 0%, between the lower earnings limit and the primary threshold, i.e. from £116 to £162, that's at 0, and then above the primary threshold to the upper earnings limit, that is at 12%, and above the upper earnings limit, that is at 2%. From an employer's perspective, again, there are no changes to the percentages for the calculation of national insurance for the NI codes of A, B, C and J. In other words, they still remain at 13.8%. So above the secondary threshold, it is 13.8%. Remember, 3 years ago there was an introduction of the NI category code letters of M and Z to identify employees aged under 21. This NI category code was linked to something called the Upper Secondary Threshold, UST. 2 years ago, there was an introduction of another NI category code letter of H to identify employees who were apprentices aged under 25. This NI category code was linked to the threshold called the Apprentices Upper Secondary Threshold, AUST. The UST and the AUST are aligned to the upper earnings limit in the 2018-19 tax year, which is set at £892 per week. Employer NI contributions for these employees is charged at 0 rate below the upper earnings limit, and above the upper earnings limit it's charged at a rate of 13.8%. Statutory payment rates. Statutory sick pay. The weekly rate for days of absence due to sickness rises to £92.05 for employees with average weekly earnings of £116 or more, a rise of £2.70. Statutory maternity pay, statutory adoption pay, shared parental pay, statutory paternity pay have all risen by £4.20 to £145.18 per week. From the 6th of April 2018, the annual student loan thresholds are: for Plan 1, the student loan threshold rises by £555 to £18,330. For Plan 2, the student loan threshold rises by £4,000 to £25,000. Student loan repayments must be deducted when an employee's earnings reaches the relevant student loan threshold. If a new employee is repaying a student loan, you will need to ask them which plan type the employee is repaying under. For a new employee, their P45 will only state that they are repaying a student loan. It doesn't tell you which plan type is being used, so you will need to ask them that question. If you get an HMRC student loan repayment SL1 start notice, then it will tell you which plan to use. These student loans are set up, if we hop across into Opera 3 and we have a look at the employee record, we can see that these student loans are set up on the Details and Bank tab. So here you decide which student loan is applicable to that particular employee. Workplace pensions reform started in October of 2012. The minimum contribution rates were set at 2%, usually split equally between the employer and the employee, with both contributing 1%. From the 6th of April 2018, the total minimum contribution must be 5%, usually split between the employer, who contributes 2%, and the employee, who contributes 3%. Both the employer and the employee can contribute more if they want to. If the employer contributes more than the minimum, the employee can reduce the contribution, provided that the total minimum contribution paid equals at least 5%. If we hop into Opera 3 and we have a look at the pension schemes, we can see here for my eligible job holder pension scheme, we can see the contribution levels are 1% employer, 1% employee. If I take this option here to change the contribution levels, I can select the payroll groups, and I now can choose to change the employer level to be 2% and the employee level to be 3%. I can also change this option here to say if they were paying the minimum contributions for the employer and the employee, if they were paying 1%, then I want these to be uprated to 2% and 3%. This might be useful if you have certain employees that you may be paying above those minimums. So in which case the employer and the employee might both be contributing 5% into this pension scheme. In which case, this example here, we wouldn't want to reduce them down from 5% to 2% and 3%. So it will only amend those where they are set, in this example, at 1% employer, 1% employee. It will change it to be 2% and 3%. And if I say OK to this, this will make those changes to those employees. It will give me an audit trail as well of all of those that are being uplifted. The Department for Work and Pensions has proposed changes to the auto-enrolment thresholds. The earning trigger for auto-enrolment remains the same at £10,000 per annum, which is £192 per week or £833 per month. The qualifying earnings lower threshold has risen by £156 to £6,032, and the qualifying earnings upper threshold has risen by £1,350 to £46,350. Some pension providers require that contributions are always rounded up to the nearest pence. This should override standard rounding rules, which determines that values are rounded to the nearest unit, so this can be either rounded up or rounded down. For example, normal rounding rules would say that a calculated pension contribution of £40.002 would normally be rounded to £40. If the pension provider requires this to be rounded up to the nearest penny, then they would want the calculated value to be rounded to £40 and a penny. If we hop into Opera and we look at the pension scheme itself, then we can see we have this option here, always round up contributions. So in my example there, this would have rounded that calculation up to £40 and a penny. Under the Pension Act of 2011, women are affected by the increase in pension age until November 2018. By then, the state pension age for both men and women will have equalised at 65 years old. From December 2018, the state pension age for both men and women born from the 6th of December 1953 to the 5th of April 1960 will increase, so that by October 2020 the state pension age for both will be 66 years old. Within the software, checks and warnings regarding employees approaching the state pension age are now displayed for both men and women born up to the 5th of April 1960. This is used to inform the payroll team that these employees will soon become a pensioner and will need their NI code changing so that they do not continue to pay national insurance. The payroll has been enhanced with warnings and a new report to help you comply with the national minimum and living wage rates. If we hop across into the software and we run this new employee age list, if I take this option here to include only if the date falls into the specified range, and I put in the range that I'm looking for and run this report through the screen, this report lists the employees' ages who cross over the national minimum and living wage ages of 19 and 25, as well as listing employees with milestone birthdays of 18, 21, 60 and 65, as we can see with these tick boxes here. If we run this report a second time, but this time we untick this date, we can now run this report at a specific date. So let's run this report through the screen. This option, if it's not ticked, then it's possible to select a specific date and therefore the ages as at that date. But the report will show the results broken down into the relevant national minimum wage band. This helps you identify those individuals that are potentially about to move from one minimum wage band to another minimum wage band. This is a pointer that allows you to identify individuals who may need their wages reviewed to meet the minimum wage of the new band they're about to move into. The payroll calculation has also been enhanced to include warnings on the audit report to show employees who are about to reach or cross over a particular minimum wage bandwidth. This will provide a timely warning because you may need to amend those employee pay rates. The existing government gateway was switched off on the 13th of Feb 2018. The features provided by that government gateway were migrated to a new HMRC multi-digital tax platform. This new multi-digital tax platform came online towards the end of 2017 and caters for online document submission to HMRC using a new transactional engine. This new platform has a different web address to the old government gateway. By upgrading to the Online Filing Manager version 4.01 prior to the 13th of Feb 2018, then you'll be using this new HMRC platform. In the new tax year, HMRC require the FPS submissions to include the student loan plan types, either Plan Type 1 or Plan Type 2, for employees repaying student loans. Also, details of benefits such as company cars along with a cash equivalent must be included in the FPS if the benefit is payrolled instead of being included on the P11D form. Previously, this was optional to include these within the FPS submission. The RTI submission files for the FPS, EPS have been updated for the 2018-19 tax year. Some of the data validation rules in the personnel module have been relaxed. This means that non-essential data for employees no longer needs to be retained within the software. So again, if we hop across into Opera 3 and we go into personnel, if we look under the personal information, things such as marital status and ethnic origin can be blanked. So the software doesn't need to record that information if you don't want to store that information on there. There are many areas that haven't changed, but there are a couple I just want to point out to you. Firstly, the employment allowance. This allows employers to reduce their Class 1 National Insurance bill by the value of this allowance. This remains the same as last year at £3,000 in the 2018-19 tax year. Secondly, the apprenticeship levy was introduced last year. This applies to all employers with a pay bill of over £3 million a year. The levy rate remains unchanged at 0.5% of the total pay bill. The government also introduced a levy allowance, which remains the same at £15,000 per tax year or £1,250 per tax month. This means that the total amount that needs to be paid is 0.5% of the pay bill minus this levy allowance of £15,000. Okay, so what do you need to do to set up for the new tax year? Let's just recap on what we discussed earlier. First of all, make sure you've got a backup. Make sure that you've updated the PAYE NI statutory payments tables and just check that that data is correct. So we're hopping through into Opera 3. We can look at those tables and just make sure that table 2 is set to the 18-19 tax year, that these bandwidths are correct, that the student loan values are correct there. The emergency tax code is set to 1185L. From the employer's NI, the apprenticeship levy is set, the employment allowance is set, and from the employee's perspective, that these bandwidths are all correct, as well as the SSP and the other statutory payments. Just make sure that the calendar is also set to the 18-19 tax year and that the set options is also set for the 18-19 tax year. Final checks. Small employers relief. The recovery and compensation rates for small employers relief and the classification of a small business haven't changed. So employers qualify if their total annual Class 1 NIC is £45,000 or less. This allows the employer to recover 100% of the statutory payments together with a 3% compensation value. If we hop into the set options, if that is the case, then you turn this flag on here within the system itself. Remember that there is a global tax change option which allows you to uplift the tax codes. So for instance, if we hop back into Opera 3, in the global changes, we know that the L tax code has gone up by 35. So we can apply this to all the employees within one particular function. And finally, remember that the minimum contributions have changed for auto-enrolment. 2% from the employer, 3% from the employee. So again, just check that you have updated the pension schemes for your auto-enrolled workers to be 2% employer, 3% employee. And that's it. You're now ready to run the first payroll in the new tax year. If you go onto the Pegasus website, pegasus.co.uk, and take this option here for the Media Centre, there's a whole range of recorded videos that are available to you. So, for instance, there's a video on introducing auto-enrolment for those of you that have yet to auto-enroll your workers. There's also a useful video that's associated with implementing auto-enrolment, along with things such as salary sacrifice, payroll self-service, which allows employees to remotely access their personal data, pay slips, pension payments and their P60s. And there's also a remote timesheet option that's available to them. Also as well, there's within Opera 3, there's email payslips and email P60s. The ability for employers to receive their payslips and P60s via email is particularly popular, both with employers and with employees. And of course, this end of year video. For those of you that are on Opera 2, then there are other things that are outside the payroll, such as things such as credit management, debt management, and a whole range of other options, including things like stock take, open period accounting, landed costs, etc. So have a look for yourself. See if there's any functionality that might be useful for you within the Opera 3 system. And finally, I would just like to say thank you for listening to this video. I hope you found the information useful. If you need further information, then please feel free to contact your Pegasus partner. They'll be more than happy to help you. Thank you.